Ladies and gentlemen, good day and welcome to the Iron Exchange India Limited's Q4 and FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Velorum Advisors. Thank you and over to you, Mr. Sonpal.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Velorum Advisors. We represent the investor relations of Iron Exchange India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Ankur Patni, Executive Director, Mr. N.M. Randive, Group Chief Financial Officer, Mr. Vasant Naik, Executive Vice President of Finance, and Mr. Milind Puranik, Company Secretary. Now, without any further delay, I request Mr. Vasant Naik to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everybody. It is a pleasure to welcome you to the earnings conference call for the fourth quarter and for the financial year ended 21-22. Let me first take you through the financial performance of our company on a consolidated basis for the fourth quarter. The operating income for the quarter was INR 4964 million, an increase of 11.5% year-on-year. Operating EBITDA reported was INR 951 million, an increase of 11% year-on-year, and the EBITDA margin stood at 19.16%. Net profit after tax reported was INR 832 million, an increase of 18% year-on-year, while the PAT margin percentage was 16.76%. For the financial year ended 21-22 on a consolidated basis, the operating income stood at INR 157.69 million, an increase of around 9% year-on-year. Operating EBITDA stood at INR 2132 million, an increase of 5.4%. The EBITDA margin reported was 13.5% and net profit was at INR 1617 million, an increase of about 13%. PAT margin was reported around 10.25%. Coming to the segment-wise operational performance, in the engineering division, the revenue for the quarter was INR 3,208 million, an increase of about 10%. The EBIT for the quarter for this segment was INR 732 million, an increase by about 31% on a year-on-year basis. For the financial year ended, revenue from this segment was INR 9,351 million, a slight decrease of 0.6%, and EBIT stood at 1,068 million, an increase about 7% compared to last year. Regarding the Sri Lanka order, the company in this quarter had commenced progressive handover of the completed stages of the project to the Sri Lanka Water Board. However, the uncertain economic outlook and the ensuing turmoil have impacted the pace of execution. We have since received further time extension from the customer for completion of the contract, and we do not perceive any credit risk in this contract. The execution of the UP Jal Nigam project has picked up pace in this quarter, and the revenue has been recognized based on the work completion. Further, the execution of other engineering contracts also picked up pace on the back of the higher order backlog. While the overall margins have improved, the rise in input costs remained a concern in this quarter. Coming to the order book as of 31st March 2022, we continue to witness encouraging order flows both in the domestic and the international segments. Our order book stood at approximately INR 1,267 crores. This excludes the Sri Lanka and the UP Jal Nigam order. And if we add these two orders, our total order book would be approximately INR 2,674 crores. Further, we have a bid pipeline of around 6,700 crores, which gives us strong revenue visibility for the next 2-3 years from the engineering segment. Coming to the chemical division, the revenue for the quarter was INR 1,515 million, an increase by approximately 17% on a year-on-year basis. The EBIT reported was INR 345 million, a decrease by 11% year-on-year. For the full year, the revenue from the chemical segment stood at INR 5,579 million, an increase of 27%, and EBIT stood at INR 1,208 million, an increase of 14% compared to last year. The sales in the domestic segment continue to record steady growth. The export volumes have also improved with the relaxation in the COVID curve. However, the logistic issues continue to hamper the dispatches. The increased raw material costs continue to pose pressure on the margins in this segment. While the company has resorted to periodic price hikes, the volatility and the rapidness of the cost increase impacted the margins. Coming to the consumer segment, the revenue for the quarter was INR 425 million, an increase about 13% on a year-on-year basis. The loss for the quarter in this segment was INR 16 million, and for the full year, the segment clocked revenue of around 1,366 million, an increase of 26% year-on-year, and loss stood at INR 36 million as compared to 37 million in the previous year. The new product launches and the increased market coverage have resulted in sequential improvements in the turnover. With this, we can now open the floor for the question and answer session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. In the interest of time and fairness to all participants, we request you to limit to 2 questions per participant. Our first question is from the line of Pratik Kothari with Unique PMS. Please go ahead.
Hi, thank you. So my first question is on the other expense. I mean, we have seen this for the whole annual basis to grow much faster than revenue. If you can throw some light on that.
Yeah, the other expenditure primarily includes the majority of the expenses in the chemical segment and in the consumer product segment. So what we have seen is the increase in the overall turnover in the chemical and the consumer product segment. So they broadly represent for the chemical segment the factory-related expenses, the utilities, and in the consumer product segment the marketing and the distribution costs. So broadly, they are increased in line with what turnover increases we have seen in these two segments. Further, we also seen some increases in the freight cost during the year, and that also is forming part of the other expenses. And lastly, the travel expenses. I mean, with the relaxation in the COVID curves, now the travel has started, so that element of expenditures also increased.
Okay, fair enough. So then the other one, we had a couple of quarters back, we had announced a large capex on the chemical side, about 250-300 odd crores. So the status of the same?
Can you come back again on that question? It was not very clear to me.
Sure. My question was a couple of quarters back, so we had announced a large greenfield capex on the resin side of 250 crores, and and on the other chemical side, we are going to spend some 50-60 odd crores between FY22 and 23. But the capex numbers don't reflect the spending which it should have. So has there been some delay in getting some clearances? Just an update on the capex part?
Yes, the capex is is slightly delayed. We are still awaiting clearance, the EC from the relevant authorities, and as soon as that is available with the company, we will initiate the capex as we have been announcing. As of now, it seems that we would not be able to complete this by the end of FY23. It will spill over to the first half of FY24.
Okay. Any specific reason regarding this delay?
The signatory, who is going to release this document, is currently not available. Once the relevant gentleman is available, the document should get signed and released.
Okay, fair enough. And sir, can you share what would be the volume growth that you have seen on the chemical division for the whole year?
It's actually very difficult to come back on specific volume details because there's a very wide variance in the type of products which we deal in, and the profile of the chemicals, the margin profiles, and even the units of measurements are different. Therefore, difficult to directly comment on what's the change in volumes for the overall segment.
Okay, fair enough. Sure. Thank you, and I'll come back in the. Thank you, and all the best.
Thank you.
Thank you. Our next question is from the line of Karan Ashley with Maximal Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congrats on a great Q4. Just continuing on the last participant on the chemicals. So, could you just help me out with the utilization levels in chemicals in Q4?
You said to give the international business on chemicals?
Right, just the capacity utilization in chemicals in Q4.
Capacity utilizations.
Yes.
The overall capacity utilizations would be in the range of around 75%.
Okay, and this is for the fourth quarter.
This is for the fourth quarter.
Right. So does that imply there has been no volume growth? Because in Q3 as well, the utilization was 75%. So sequentially, is it right to say that there has not been much volume growth?
For the chemicals side of business, the volumes have been more or less similar to what we have seen in the third quarter. There would be differences somewhere in different product lines, but per se, when we are looking at capacity utilizations, they would be in that range of 75%.
Sure, sir, understood. And so could you help me out with the capex figures for FY22 and for FY23, and towards which segment would this capex be for?
FY22 figures we will give to you. Vasant, can you please share?
Yeah. The overall capex was in the region of around 49 crores, and the major capex we have incurred is largely in the what we have mentioned in the earlier calls, that we are in the process of enhancing the capacity of our membrane plant. So that's where a part of the capex has gone, and also we have gone into in terms of improving the capacities at our engineering divisions which are manufacturing the standard plants. And also some incremental capex has gone in the chemical divisions. So largely this our total 49 crores capex is largely in these three segments. In terms of the next year, 22-23, our total capex we expect in the region of around 60 to 70 crores. And here again, the major capex would be in completing the capacity enhancement of our membrane facility in 22-23. Plus the incremental capex which we do every year in the region of 15 to 20 crores in our chemical segment, that will continue.
Sure, so very helpful. And just a quick question if I could squeeze in. So last 3 years, engineering, we've seen the revenue roughly, in the range of about 935 to 940 crores. So what is the outlook going forward? Could we hope to, sort of cross that 1,000 crore revenue mark in FY23?
We will certainly see a significant improvement on the engineering revenue in FY23. We are sitting with a very strong order book at this point of time, and we are also witnessing a good inquiry bank, and prospects of converting further orders are also very bright. With that, we should be looking at a very good growth over what we have seen the previous year.
Sure, that was helpful. Thanks and good luck.
Thank you. Our next question is of line of Sunil Kothari with Unique PMS. Please go ahead.
Thanks for opportunity. Sir, congratulations, Mr. Patni and team for such a good numbers and very manageable and creditable EBITDA performance. Sir, coming out from this 2 years challenging environment, how do you look at engineering business per se in terms of execution or preparedness? Because it seems that now there should be a very high, you said just now that there is a significant scope of improving revenue. So are we prepared for a higher numbers and higher execution orders? That is the one question. And second one, I think we are expecting some big order from international market, which yet not happening of some of the whatever reason. So if you can explain possibilities of getting those orders from international market and our preparedness to execute higher orders in current year.
We are quite well prepared to execute these orders and work at a much higher scale than we are today. We keep augmenting our capacities and our ability to execute these projects, and would be able to supplement current capacities as and when required. As regard international orders, which we have been in discussion for quite some time, there is progress on these orders, and we are sitting quite close to finalization on some of these contracts. But I still do not have anything to declare for at this point of time, and certainly hope that we would be able to do so in the very near future.
Right. Fine, sir. And sir, what's your outlook, say, compared to last 2-3 years experience and our preparedness? Both the segment, if you can little bit be looking at the international scenario, the people want now China plus one, extra source from Western world. People would like to source more from country like India. Both the division, how you see opportunity for next 2-3 year, broad some thought process?
I think we are standing at a very interesting juncture with some of the threats posed the pandemic seeming to be behind us. With the Ukraine war also having been absorbed and the impacts of it having been seemingly absorbed in terms of perceptions, there seems to be an uptick in growth expectations across the board. India is certainly witnessing an increased flow of inquiries. There is also improvements which we are witnessing in Southeast Asia, the Middle East, and in the other geographies. The one area of concern still is Europe, which is facing relatively higher impacts of the ongoing war. I do hope that we would be setting these well behind us in the very near future. And once that happens, and there is an economic recovery of sorts across the board, we should be seeing a substantial increase in opportunities for us. In any case, we are quite expectant of good growth coming in from the international market. as well as domestic markets, which seem to be now reviving. The next 3 years outlook, I would say, is quite good for us.
In terms of chemicals, sir?
Please come again.
Chemical segment?
Chemical segment, likewise, we have been growing quite well in terms of our chemical business in the international market, resins and other chemicals, both of them. There were some hiccups faced in the last couple of years arising out of logistic challenges, availability of containers and the cost of transportation both coming into play. That had slowed down our growth in the international market somehow. I do hope that in the coming year we would be able to show much stronger growth as compared to what we have been able to in the last couple of years. Added to this, the increasing capacities which we have been announcing on the Concalls, and the substantial increase in the resin capacity which we anticipate in the next couple of years, that would give a big fillip to leap in terms of revenues coming in from the resin business. Both of these together could see good growth coming in from the chemical segment also.
Yes, sir. And my last question is some outlook on margin for current year, both the division.
On an overall basis, I am quite hopeful that we would be able to improve margins if the trend of the raw material prices softens a little bit. They have been at a escalated level for quite some time now, and the expectations of softening of these rates has been on the cards. And once that happens, the margin expansions should take place. But even so, my overall conservative thought process is we should be able to maintain the full year margin similar to what we have achieved in the last year.
Great, sir. Thanks a lot. Wish you good luck and come back to you. Thank you.
Thank you. Our next question is from the line of Ishrat Khatri from Concall Capital. Please go ahead.
Yeah, hi sir. Good afternoon. So I wanted to understand the margins for the engineering business. So we see that we've had one of the in fact, the highest margins that we've ever reported. And we saw a similar trend in Q4 last year as well. So is there a seasonal trend that we can expect going ahead? And why was the margin so high? I mean, I understand it should possibly not be sustainable, but any reason for the margins being so high?
We do witness a jump in margins coming into the last quarter of the financial year. This has been sort of a trend for some years now. It happens on account of maybe 3-4 different factors coming into play altogether. One of the key factors is the scale at which the last quarter numbers come in. They're much higher than what the other quarters are reporting. And therefore, we manage to leverage the fixed costs much better, and the EBIT margins and EBITDA margins would scale up on account of that. The other reasons are we have a little bit of a different mix of products, and the revenue contributions from the slightly higher profit margin businesses increased, and that also contributes to a corresponding increase in the overall margin level. Some of the costs which were at an escalated level and we were trying to pass on these costs to the customers, we have been progressively able to pass on some of these costs, and that also improved our overall margin. So a few of these factors have together led to a big jump. If I have to talk about sustainability of these margins, I think the overall year numbers that we have reported, margins for the entire year, that we should be well in a position to repeat on a continuous basis. You would see variations from quarter to quarter, but the year-end numbers should be almost in the same range.
Okay, I think about 11.5 odd percent EBIT margins is what we made in FY22. So that, according to you, should be sustainable for the coming years as well, right?
That's right.
Okay. Also, sir, another question. I understand that situations are very uncertain in Sri Lanka, and time and again we've not been able to complete the Sri Lanka project. But just if you could throw some light on the situation at Sri Lanka, I understand you've written that there's no credit risk for Sri Lanka, and we should be able to get whatever 250 odd crores of unexecuted portion that is still there. But if you could just throw some light in terms of the execution, when can we tentatively expect completion for this project?
The situation on the ground in Sri Lanka is quite uncertain. You would all be reading about the economic turmoil that the country has gone through, and consequently other challenges which they are facing. For us, the major challenge has been operational, because the availability of fuel, of manpower, of subcontractors, they are the ones which became a little bit unpredictable and uncertain and led to a slowdown in the pace of execution. That has led to extension of the period which we were earlier estimating, and now we have from the Sri Lankan Water Board a time extension up to the second quarter of the current financial year. We should be in a good position to complete this contract by that time. Again, hoping that the situation would be smooth on the ground for execution. We do not have any credit risk, because we are not directly getting paid by the Sri Lankan government, and we have got guarantees for these payments. It's insured and guaranteed. So with those things in place, we do not really have any credit risk. But the pace at which we were hoping that the revenues would get booked, that has slowed down, and there is a little bit of an uncertainty about that. We are going by the guidance of the concerned ministries and our insurers and everyone else, and we would accordingly pace the revenue recognition.
Okay, got it, sir. Also, sir, Randeep sir mentioned that we'll be doing about 60 to 70 crore capex for the chemicals business for this year. So, from what I remember, the overall capex, was it 150 to 200 crores, or was it 200 to 250 crores that we were intending to do for the resins plant, the greenfield capex?
The greenfield capex would be upward of 200 crores. It would be number significantly above 200 crores.
So out of that, 60 to 70 crores should be in FY23, and you mentioned that by the end of first half of FY24 we expect completion. So a major chunk of it would be in FY24 is what I'm assuming?
So the figure of around 50 to 60 crores which was mentioned is on top of this figure which would come in for the greenfield project.
Oh, okay. But so next year for the greenfield, what can we expect, sir?
On account of the greenfield project, we could be having some portion of that expense coming in. It is not a front-ended expenditure which would happen. There would be a good portion of the expenditure with later part of execution. But we are waiting for the EC clearance to happen first. Based on when that happens, we would be able to project how much would happen in the current year.
Sure. So meanwhile, just one last thing. Meanwhile, at the resin plant at Ankleshwar, we have enough capacities to grow because you mentioned overall utilization for chemicals was 70%. But for the resin plant specifically at Ankleshwar, I believe we used to run at over 90% utilizations, and we've done some brownfield as well. So what would be the utilization level for the Ankleshwar plant?
So there is still some headroom available, both at Ankleshwar, and we are also trying to see if we can, incrementally make some more adjustments there to augment capacity for the time being. There is substantial headroom available in our other chemical facility. So for the chemical segment as a whole, we should be able to, cover quite a bit of increased revenue in the coming year.
Sure, sir. Thank you so much. That's all from my end. Thank you.
Thank you.
Thank you. Our next question is from the line of Siddharth Malhotra, an investor. Please go ahead.
Yeah, hi. Good afternoon. My question was just in this because the crude prices are envisaged to remain high. Do we foresee any business from that particular area, oil and gas, especially from the Middle East? Is that a potential sector for us for business going forward?
Oil and gas and refinery are significant consumers of water and other chemicals and products which go into the wastewater side of the treatment cycle. Therefore, an uptick in investments or operation levels of these facilities would have a consequent opportunity for companies like us. To the extent that the current level of prices sustain themselves and also the relevant organizations convert these into capex plans, we should see further business coming in. This would happen in India as well as in the international market. As you rightly identified, Middle East is one of the important markets when it comes to this particular sector.
Right. That's it, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Deepen Shah, an investor. Please go ahead.
Yeah, sir, most of the questions have been answered. Thank you so much.
Okay.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star 1 on your telephone keypad. Our next question is from the line of Priyesh Babaria with B&K Securities India Private Limited. Please go ahead.
Good afternoon, sir. So thank you so much for the opportunity. So we were actually expecting some respite, specifically in consumer product business, in terms of profitability. So we actually could not be able to buy in this quarter, fourth quarter. So when can we expect to turn around this business as of now?
We should almost certainly see a turnaround of that business in the current financial year, that is FY23. The growth momentum has picked up. That would be probably visible if you compare quarter-to-quarter growth which has been happening. We are seeing increased level of business even after the fourth quarter, and this should translate into substantial improvement in the overall turnover of the business, and that would lead to a positive EBITDA. That's our belief as of now.
Right, understood. Thank you so much, sir. That's all from my side.
Thank you. Our next question is from the line of Anupam Agarwal with Lucky Investment. Please go ahead.
Hi, sir. My question was the same as earlier participant. It's answered. Thank you so much.
Okay.
Thank you. Our next question is from the line of Jainam Doshi with Quiz PMS. Please go ahead.
Hi, sir. During the last con call, there was a discussion pertaining to the company's role in purified water segment for the semiconductor business. And also it was mentioned that the company is into active discussions for some big opportunities. So can you please provide some insights along with the numbers for the same if possible?
Yes, we continue to be interested in the opportunity, and we are engaging in several discussions with for potential contracts. There have been a couple of opportunities which have been converted, and orders are in with the company. But unfortunately, these are the numbers which we're not really sharing details of each and every contract with the stock exchange. And as such, I can only reflect that the opportunity remains interesting, and we have converted some of these, and we will continue to and hopeful to get more of these opportunities into our bag.
Sure, sir. Thank you. That's all from my side.
Thank you. Our next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, good afternoon. One question on your project business. How is the international pipeline looking like, and is there a rethink on this part of the business at all, given the rather unpleasant experience in Sri Lanka? Obviously, it's been an accident. Some thoughts on that?
I'm not sure, what unpleasant experience that you are talking about. For us, the business which we got from the Sri Lankan water board has been quite a good one in terms of revenue as well as margins. And as I had mentioned earlier, there is no credit risk envisaged. We've been getting good payments, and the cash flows have been pretty strong on account of this contract. The future projection from this contract also remains quite good. But if you are referring to the political uncertainties which have cropped up, or the economic uncertainties which have cropped up in recent times, yes, we are well aware of that, and that's the reason that we take a lot of time to ensure that we are mitigating all possible risks, including credit risks of this nature, and continue to be conservative and careful when looking at these opportunities and finally converting them into contracts. The future outlook is quite strong, as I've been mentioning over a few of the calls. We are working on some of very large opportunities in the international market, along with the smaller and medium-sized ones. All of these continue to remain on the table for us and are attractive business prospects.
I was, of course, referring to the political situation rather than just the project-specific dynamic. Good that you are well secure on that count. But one question, sir: are you fully protected on the profitability side given the time delays? Are you fully protected on the profitability side in these projects, in this particular project?
Yes, there is no material change in the profitability profile.
That's interesting. Thank you for answering, and best wishes.
Thank you.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir. On the UP project, sir, what have been how have been the execution for this year, the quantum? What percentage have we executed, and when is the remaining going to be executed, the remaining part of the order? And do we have other milestone or any follow-up orders in the pipeline from the same, or is it done with the completion of the existing order?
The UP order would get executed over a frame of 18 to 24 months. A good portion of what we have already in hand would get executed by FY24. And there is a small portion of this contract which is still under processing. And once that also gets converted into a firm invoiceable amount, that would also materialize by the first half of FY25. That's the projection for what this order would be looking like. Current numbers, Vasant would share with you.
The current numbers, hello?
Vasant, can you share?
And sir, it is all in the Jal and Nal scheme scope of work that we have got this order under that scheme only.
Sorry, couldn't get your question. What are you asking?
Sir, the UP order was from the under the Jal and Nal scheme, the flagship of the central government.
That's right. That's right.
Okay. But sir, here I think the size of the order, the execution will be over a much larger period of time. So, do we envisage more of orders coming up even post 2024, or because I think the scope of work is there for at least 3-4 years to continue, or do we think that in our domain the work would get over by 2024?
No, there are many more opportunities to work on. The current contract which we have got, that has got an execution period of 18 months to 24 months. And there are many more opportunities which are available for the taking. We have been a little bit cautious about the quantum of work that we want to pick up for this particular segment, and very carefully analyzing the risk profile attached with each and every such opportunity. And we are wanting to, and we are working on only those where we are very comfortable with the overall risk. And we will be picking up more of these. As of now, this is the only one that we have converted into a contract.
Correct. Right, sir. Thank you.
Yeah.
Thank you. Our next question is from the line of Priyesh Babaria with B&K Securities India Private Limited. Please go ahead.
Yeah, hi. Thank you so much for the opportunity again. Can you give some more color on what kind of pipeline are we looking at? So basically, we have stated that we have a bid pipeline of around 67 billion. Can you also throw some light on what kind of key end markets are we looking for the same?
Good portion of this inquiry bank would be targeted at projects which is capital expenditure by large and medium industries. The industries which seem to give the larger sized contracts would be the refinery segment, the power segment, the steel sector. Some of these sectors which have traditionally been the largest size of orders. Apart from this, we also have opportunities from the relatively smaller sized industries like textiles, like pharma, like the chemical industry, and the sugar industry or the food and beverage industry. And the last constituent of this segment from the industrial side would be the institutional and the hotel kind of business, which also contributes some quantum. Besides this, there is the government and the infrastructure side of business, which also contributes significant quantum. So that's, on a very broad level, that's the kind of industries which constitute this inquiry.
Yeah, thank you so much. So, pertaining to the same, so what kind of a mix are we looking at? So, what is the mix between government and private orders in this pipeline?
No, it tends to flow from time to time based on significant contract which gets converted. Traditionally, we have not been very active on the municipal side or direct government orders. But as you would know that out of our current inquiry bank, good portion is provided by the Sri Lankan order as well as the UP order. That would give a lion's chunk of the overall order bank. However, if you look at the opportunities that we are focusing on, there is a good portion also coming in from industries which will include PSUs. It's not necessarily private sector. PSUs are also included in the industrial part of business, and there is a good portion of business which we are expecting from the industrial bucket also.
All right. Thank you. Thank you so much, sir. All the best for the call. Thank you.
Thank you.
Thank you. Our next question is from the line of Inderjeet Chakravarti, an investor. Please go ahead.
Mr. Patni, namaskar. Thank you for taking my questions. I just have two questions. My first question is that to what extent has the company been able to pass on this high input costs, like the cost of oil and stuff like that, and has it dented the demand in any way? And my small second question is that this semiconductor business numbers, that would add to which segment? Will it get clubbed to the engineering segment, isn't it? Thank you.
Yes, there have been very steep increases in input prices, and we have witnessed a period which was quite unprecedented both volatility and also the period for which a one-way increase has happened. That has led to some challenges in being able to pass on these prices effectively. But over a period of time, we've been able to achieve some degree of price increases, even where the contract did not provide for such increases. I think our customers have been quite reasonable and understanding where is there an echo from my line?
Yeah, there is. I can't hear you sometimes, sir.
Is it better now?
Yeah, thank you.
Right. So we have been, increasingly successful in passing on some of these price rises. We continue to strive to do so. However, there is, if you look at the overall margin profile, there is a slight reduction compared to what we had achieved earlier. And we are hoping that with the next quarter or so, we should start to come back more in line with what we had achieved in the year before. I don't know if echo is gone. Yes. I can hear an echo on my side.
Hello?
Are you being able to hear now?
Yes, again I can hear you, sir.
So, as I said, I do hope that we would be able to increasing success in passing on full rise, and also this volatility which we have witnessed earlier not continue in future. In which case, the overall margin profile will improve further.
Okay. And right now, what is the effect on the margins because of this price increase on percentage terms maybe?
we have seen some improvement in the overall margins.
But from your line, please stay connected. I'll disconnect and call you. Hello, Mr. Patni.
I can hear substantial improvement.
Are we recording it?
Ladies and gentlemen, we have line for Mr. Patni and for the management connected.
I don't know. This is better now.
Yes, I can hear you now.
Okay. So I think I'll just quickly comment on that response. We should see improving margins here from.
Hello?
I'm sorry for these technical issues that we are currently having. I think the short answer to the question is that we will see improving margins here from, and yes, there is still an impact of the increased prices, which hopefully the impacts will keep going down. The quantum of impact you can see evident from the year-end margin percentages, especially on the chemical part of the business. Can you hear me? Oh shit. Hello? Hello?
We can hear you, Ankur. We can hear you.
I don't know if
have we lost the conference? I don't know.
Am I being heard?
Yes.
Okay, so regarding the semiconductor numbers, that gets clubbed to the engineering section, right?
So the business, which we do with a particular industry, depends on the product line that we are offering to that industry. If we are offering engineering project, it would figure under the engineering segment. And if we are offering our chemicals or resins, it would get clubbed with the chemical segment.
Okay. So semiconductor goes to, it can go to engineering or chemical, right?
Yes, depending upon the product which is being offered.
Okay, sir. Okay, thank you. Thanks a lot. Thanks a lot for the effort and everything with all the trouble which you had right now. Thanks.
Sorry for the trouble.
Oh, thank you. And best of luck, sir.
Thank you.
Thank you. Our next question is from the line of Ishrat Khatri with Omkara Capital. Please go ahead.
Yeah, hi sir. Just to follow up, wanted to understand what is the situation with the membrane plants. What kind of annual revenues do we book under the membrane plant? Because you mentioned we are also expanding capacities there. So what would be the utilizations?
Currently, I think the echo is gone now, so it's probably more to do with the side of the previous caller. Anyway, so as far as the membrane plant is concerned, we are currently working at well over 90% capacity utilizations. The expansion is on, and we should see the implementation of that expansion by the half of this year. So we'll have that extended capacity online.
Okay, so is it safe to assume that we book about 80 to 90 odd crores of revenue? Because I remember at 100% we were expecting 100 to 110 crores of revenues from the membrane plant, right?
So we would be looking at somewhere around 60 to 70 crores with 100% utilization on a two-shift basis, and we will now be doubling that capacity.
Okay, great to hear, sir. So on the other projects that the company has received, the IOCL project, the recent Morocco win that we've had for desalination, would you want to throw some lights on the new wins as well, and have we started execution for any of these projects?
These projects, the initial work has started, but the invoicing from these, it typically takes a little bit of a time before the first revenue start to get booked. So once the order is in, maybe 2 or 3 months of time, which would go for initial engineering and the work which would ultimately translate into invoices.
Okay, and just one last thing, sir. Have we completed the execution of the CAME project?
No, it's at the fag end of execution.
Okay, thank you so much, sir. That's all.
Thank you. Our next question is from the line of Sunil Kothari with Unique PMS. Please go ahead.
Thanks for again opportunity, sir. Sir, my question is on dividend and capital allocation. We are generating really good earning and cash flow. Our dividend is really very small. So what's your thought process?
I think the attempt from our side is that we use the internal generating for, as you know, that we are looking at expanding capacities on our chemical business, which would yield good returns to the shareholders in coming times. So that's one of the efforts, and the other effort is to use additional cash available with the company to further expand our project and the engineering side of business. Again, as you would have seen from our balance sheets of previous years, that during the period where we execute these projects, a substantial amount of investment is required, especially where the contract sizes are large. So as we strive to go into larger scale of executions, we would require additional capital in the company to support this growth. And we are hoping that with these increased revenues and a higher scale of operation, we would be able to create more value for the shareholders.
Yes, sir. And sir, second question is on chemical segment. We have invested very high on R&D center also. Our second R&D center, I think 2-3 years back, we invested 30-35 crore. So what type of work we are doing and what is outcome? What's your thought? The observation on the R&D investment we made and what benefits over a period we should expect about? Hello.
Ladies and gentlemen, we have lost line for Mr. Patni. Please stay connected while we join him back in the call again. We have the line for the management connected. Mr. Kothari,
Yeah.
you can proceed with your question.
Should I repeat the question?
I'm sorry, Mr. Kothari, you have to, because I got disconnected in between.
Okay. Sir, so basically what I was trying to ask is we invested some 35 crore on R&D, new R&D center some 1.5, 2 year back. So would like to understand what we are doing exactly, what are the benefits you see over a period, your thought process on R&D expenses and the efforts we are taking.
I would ask Hosant to throw light on the exact quantum of investments which we made. I don't have a record of that offhand, but the kind of business that we are in, we need to continuously innovate and bring out new products. That is, a core requirement of our business and also propels our ability to maintain margins at a level which is better than what otherwise is available for commodity players. Therefore, an important investment for us to make. We have more than 100 people employed in our R&D efforts, and we continue to come out with new products as well as innovate in various ways to ensure that the competitiveness of the company's products is maintained.
Interesting. Sir, my second question is on I think a year back also, you confirmed that we are also planning to consolidate our Indian subsidiaries and some associates. Any progress on that?
Yes, there is a progress. In the next quarter, we will initiate this merger exercise, which would involve more than 2 companies. And this is the first step of consolidating some of our subsidiaries. This first action would also be followed by more such consolidation in coming time.
Thanks a lot, sir. Wish you good luck. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. N.M. Ranadive from Iron Exchange for closing comments.
Thank you all for participating in this earnings phone call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers, Velaram Advisors. Thank you.
Thank you. On behalf of Iron Exchange India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.